This green candle had taken this candle high, and it's happening in your point of interest. If the daily candle closes and this spike is there, you can look for a sell entry, right? You look for a sell entry, but again, this is just an additional information, right? But let me go to what you should do. If it closes, because it's already taken liquidity of that candle, you go to a lower time frame, you can look for a sell. But if, for example, you are trading that way, you are looking for a sell, your take profits, your stay in the market more than this low, right? But don't worry, that's not what I'm trying to show you. So now, the position point, what you need for confirmation is that you need the market to, in 1 hour. Again, maybe you are using 15 minutes, but usually this is daily. Daily to 1 hour is like 1:24, right? So it's high enough for you to do daily and 1 hour. You check 4 hours again. So this is on the lower time frame. This is 1 hour. This will be your chalk. Lower time frame. So why is it your chalk? Number one is that you have a higher time frame daily. The price is on your point of interest. If a lower time frame mitigates a higher time frame POI and it closes bodily closure below the first pullback, it's a change in character because it has seen something bigger than itself, right? The lower time frame had met something that is bigger than itself. So to follow the flow, the direction of the higher time frame. So what you need now for DSY, and that's why the patience comes in, is that we need it to come and if it doesn't take out this one, if it takes out this one, what happens? We'll then look for this leg. This is where we're interested in to take our trade. This move that broke this point, you then look for your reference point, right? You start from another flow. From another flow, you go to another block. You can also, okay, so in terms of sequence, right? You start from an imbalance, which is a fair value gap, because it will occur before your other flow. Then you go to your other flow, then you go to your other block. So other block is a refinement of these things I've just mentioned. Other block is a refinement of another flow, right? So that sometimes you are waiting for price to get to your other block. It doesn't get it. It doesn't get there and it continues to go down. Yeah. These things I just mentioned, you may not have been putting them into consideration. So for DXY, this is what we'll be looking at. So I wouldn't want to go to 4 hours to analyze this again so that we don't take much time. I'm not sure a lot of us trade the DXY, but this is just giving us directionally. This is what it is. Why you need to get a confirmation for you to sell. And that's why taking trade off your higher time frame is a bit risky, right? Because for you to have a confirmation that it's going to fall, it needs to take out this. If it takes out this one, very likely, your highest POI, for example, if it does that, will be somewhere around here. Maybe, for example, this is another flow, right? So this will be the highest direction. If you enter a sell here and it comes and takes you out, it's not ready to sell, right? So that's what it means. All right. So this is what DSY is talking about. So this is pair number one. So let me check, all right, before I go to other pair. I'm interested in, because I want to analyze what we're trading. And it's very simple. So a lot of us who are in the academy, whether you funded your account, you blew your account, that is immaterial. All of us, we have put money in trading, we've lost money, and let's say resilience, continuous practice, getting the right knowledge, we're then making money, right? So it's the process, right? So you continue to trade, you trade the right way, and again, don't have unrealistic expectation, right? That is very important, especially if you had also procured a funded account. If you procured a funded account, and let's say it didn't go well, or maybe you're not trying to trade with your own account, let's say you have a $50 account. It takes you a bit of time to be able to mentally shift from your funded account to your normal account. Because on your foreign account, maybe you're trading with even a standard lot, or maybe 0.1, right? And maybe you see $50, you don't close it, you're getting to $500. So when you then start trading with a $50 account, and let's say you're doing maybe a 0.02, maybe 0.01, 0.03, you see $3 after 10 pips, it doesn't move as fast, right? So it takes a bit of time. So you need to understand those different points so that I will trade the right way. Again, just so that I don't also repeat it. I know that last week I told somebody, I said, the beginning of September, because again, I trade a funded account also, MFL. They're having a bit of issue, right? Don't know what that issue would lie. But again, in my head, I just said, okay, don't worry. I'm not going to buy any funded account for now, right? And I realized that I had $43 in my Admiral account. That's my Admiral account. And I said, okay, if I trade this now and I do $10 per day, if I make $10, I leave the market. In a month, I would have increased the balance of that account, right? So why I'm just trying to say this is because some of us were trading. Dollar now is getting to 1,000 naira. So if you are funding your account, let's say you are funding 50,000, you could just get maybe $55 or maybe $60, for example. So it's not that huge. So you need to also condition your mind so you're able to grow that, because you cannot be funding naira to dollar. The impact on your savings will be very huge, right? So I said, okay, don't worry. For the $3, if I do 20 trading days, that's $200, right? Let's say I didn't get trade, I only got trade 15 days, so that would be about 150. Again, remember that there are some days you also make more than your $10, right? But just say that you're very disciplined. Today is 24th. I was checking that account on Friday. One of those, again, I'd also withdrawn $20, right? So why did I withdraw the $20? I wanted to withdraw USD. I noticed that they are not able to give me USD to my DOM account. So I tried to do a USD withdrawal, and they gave me an error message and said I needed to withdraw 15,000 something for me to exhaust my Naira deposit. So I wanted to try that. Then 2 weeks back, I decided to withdraw $20. That was the exchange rate of 975. I had about I think 19,135. So I withdrew it. But again, the error message was just misleading. When I withdrew it, I then made an attempt to take USD, and I was told that I need to, it's Naira they will give me. So I had to then check with the account manager. So, no, if you do Naira deposits, that's what you continue to withdraw through, right? So that was the reason why I withdrew the $20 initially. But even having withdrawn $20, on Friday, I was looking at it. Again, what I then did again was to create another live account and then put some fund to it, right? Why did I do this? So I then realized that the fact I'm closing $10 in that account, sometimes because these trades, I wait for confirmation of a trade. They then get to take profit, right? So I felt I was leaving some money in the table. So I then initially I moved $20 into that account. That was before this week trading week I just passed. But I wanted to, that was the gold trade that we analyzed, right? Toyo and Kayamugo were on that call last week. So I wanted to have a pending order before market opens on Sunday. So I could not enter the trade, right? So I was wondering what was the issue. So I had to reach out to the Admiral guys, and they said, oh, there's a minimum balance of $25. God moved just $20, So I chopped that to $30 from the main account, not the new deposit, right? Again, I was then checking the balance on Friday, and I saw that the account is, the main one is $163. So imagine. So sometimes you look at this money, you think that until you make $100, that's when you can grow an account. That's why I'm just giving you this real example. For 1 year, you have the skill, then you just say, this is what it is, right? And just go through. It's a process. You don't, sometimes you can say you want to make $1,000, right? It all depends on your account size. So on Friday, that account is $163, right? EJ sell is in profit because, again, I can analyze it. We can share that here. I think that it should sell based on where I entered. We just 30 pips. It doesn't sell, that's his business, right? So that's the active trade I have on those accounts, but that is not even the bonus discussion. So I have $163 now in the 0MT4, right? The one I then open to create so that I can use that one the challenger account. It was $57, right? So if you do a combination of those two accounts, it's more than $200. If I then had the $20 had withdrawn earlier in the month, that's more than $220, and that was for the $3 opening balance, right? So the thing is that trading is a process, right? And again, I usually say it when the class and maybe once in a while doing the market review. If you are trading and you are bringing, because we've gone through this process and I know it is. If you are using your money to fund your trading account, over time, you start telling yourself that trading is putting you in a worse position, because if you hadn't started trading, perhaps maybe you had also invested in knowledge, one. The other one is that you had also funded your account. If you go and do your aggregate expenses, maybe it's getting to 500,000. So is that thinking, well, let's say I didn't even bother about trading without putting the running cost, your data and every other stuff, $500 in my account, perhaps it's going to solve XYZ problem for you. So that's one way to look at it. The other one is to look at it and say it's a process, right? And then say, what did you do wrongly? But the moment you catch what works for you, don't change it, right? So as you are making mistakes, you are trading, you are losing, you are making money. Once you then catch what works, don't ever change it. Just continue to improve on it. So, for example, there's no evangelization you give to me now to tell me this is how you trade. Go to monthly, go to weekly. No, I trade. I look at 4-hour structure and I enter my trade 50 minutes. And if it doesn't tick out, I mentioned inducement, right? Which is again liquidity. If it doesn't tick it out, regardless of how sweet that trade will be, I don't take it, right? So I just want to test with the 0.01. So you must have a style that you trade. Okay, so this is enough of the sermon. But why I just said this is that one of those motivations, even in terms of the review, why a lot of us would want to join, and that's because you're actively trading. If you don't trade, let's say because you had blown your account, you don't have an active account to trade. To be honest with you, to review charts, you don't have them because you're not taking trade. And if you have been trading a live account and you want to go and be trading demo, sometimes we say you backtest a strategy on the demo. Most times, where it's difficult for us to do it, especially when you had a live account before. You would rather go and fund your live account and start testing it, right? So those things are there. But what we also try to do is that I know there are a lot of trade ideas we also drop. The MD does that a lot on the WhatsApp group and everything. So we can look at those out there. On your own, you can analyze, chat, and share, and we'll be able to tell you, well, you can, if XYZ happens, you can take the trade. So now, why sometimes the trade that we enter, right? I said once in a while that we can just drop it if it has not happened. Some trades are very fast because as we were having a live trading session, we'll say, okay, everybody is entering, this is the stop loss. Sometimes it will just happen and you are not able to share the idea. So for example, this is an analysis that we have looked at on the daily, right? So we already know what we're for. So that's why that knowledge is very important. And let's say you are trading daily and 1 hour entry. We already know that if it breaks here, we'll look for sell. This is a review. This is on a Sunday. When market opens, let's say 10:30, 11, and it's doing that, maybe somebody is at work, right? If you get to the understanding and say, when it breaks here, and check. Number one is that you don't enter, when it breaks, we don't do those breakouts, you enter, no. Those are old school trader, right? All those retail trader stuff. Because let's say there's a breakout here, you enter here, that is, we can say sell stop, right? And because your stop loss needs to be above this area, so you cannot enter trade this way. If you go and do breakouts, you put it just above this area, you to take your stop loss, right? So we don't trade that way. So when it breaks here, what you are waiting for price to do, as is, let's say it does something like this. Let's say this is how it does it before it came down here. Number one is, when something like this happens, we will not trade here. No, don't let me say we. Don't let me personalize the stuff. I will not trade here because this is the first pullback, right? This is smart money trading, just entering another block. I would trade this one. This is where normally, if I had a pending order, my pending order would be on the next order block, right? After I got this is an inducement. I would only trade this one if, for example, there's a candle like this. Like this is a candle. And the candle does something like this. Now, if this candle, what it has done is that it has taken out this spike, has taken out this inducement. It may not mitigate this other block, right? But it has taken out the liquidity here, but it did not close above it. Then in this case, I would then enter a market execution, right? And the stop loss is just above it. Then you target the immediate low. Even though you know that it's going to sell, it's selling downwards. You cannot come and you target this area. No. Why is for your mental health, right? So that we don't want depression. So you target your low first, that time frame low. This is 1 hour. You target the low. Why? Because when market takes out this low, it is going to retrace, right? It's going to come back. You cannot pray, you cannot wish it out. It's normal. When market takes out the low or takes out any high, it's going to retrace, whether little or massively. So if it's retracing, it's coming to pick another order. Now, when it's retracing, let's say this bearish move was very sharp and it took out this way, gave you this take profit. If there's no pullback before this move, it will come back here. Because there's no pullback, this is then the inducement. It will take you out here, right? And it will pick the entry here again and then come back and break the structure, right? Because when it breaks the structure, it will be somewhere here, for example. If it's very far, let's say initial view here, you should be trading it to this point, right? So there's no need for you to hold trade for a long time. That's why I said we are retail traders, right? So you need to have that understanding. So again, why I'm saying this is that once we analyze the market, I would say this is the idea. In terms of your entry, again, once we look at the chart and we see, we are very transparent, right? If for example, we have traded gold, I said we're going to trade gold sell. And then I saw it on Friday and we're reviewing on Sunday. And we traded the sell. But because gold was not moving fast the way it should move, right? I knew that there was a risk that it could go fast. When it was 1923, I said I've already exited the trade. And that trade, on that two small account, I already made for the $3. So why should I hold on to those trades? Because those times that it was retracing, I was entering additional position because I was feeling those structure was breaking. It had not invalidated the setup, right? So when it got to 1923, it was already sufficient for me to close all the entries, right? So that's very important. Okay, so DXY is done. Let me quickly check. Again, I'm interested in the pair that people want to trade. That's why I don't want to just, no, Joker has been in and out, so our network has been, okay. So Toyo, this is DXY, so it's at the decision point. So let's see what happens. Do you have any other pair? If you have any other pair, drop it. Otherwise, let's just quickly look at other pair. Okay, so let me take EJ because I mentioned EJ. I'm in this cell, right? So let me see. That's Euro JPY. Okay, so let me open it on. So in this case, I would not. This is 1 hour. I will just check. Let me see. There's a message. Okay. So this is the second pair, so it'll be very fast with other reviews so that we can round up in 4:30. Okay, so let's look at EJ, right? Then there's enough, this is 4 hours. I don't want to go to other time frames. So there's a lot of movement in here that we can use to take trading decisions. So I may not necessarily check the daily, right? So let's see 4 hours. Let's see what the outlook of 4 hours is. already, so this is your previous structure, right? This was your high. This was where there was a break in structure. So again, it's a confirmed break of structure, right? So I don't need to tell you inducement. Okay, so now what happened? Let's see. It got to this point, but where's the inducement? The inducement is somewhere down. It didn't get back there initially. This high, right? This it took out. So look at it. This high is not confirmed. Then this other one took out the liquidity in the high. So when it took out the liquidity in the high, it means that this is then the inducement, this one. Because that high it then transferred to the next one, right? So this is the inducement. So it's when it came back, right? From this point, I came back and took out this one. That high is then confirmed, this high, right? So this, what then happened? There's a bodily closure above it, though it struggled, right? And that's why it sold, right? But we'll say this is a break of structure. I broke the structure. If you broke the structure, this line that broke the structure, this is, the inducement is this place. It needs to take out this one for us to say that that was a valid high. And of course, it broke it out. So what it means is that this one, this is a valid high, right? So if it's a valid high, what is then happening? So this one, it broke this high. Where's the first pullback of that move? The first pullback is somewhere here, right? So market needs to take out this area for us to say that that was a high. So what is it? So this is our range. This is, it needs to come and break this point for us to say it's going to the upside, right? So we've already seen it, that it needs to break that point. Now, between this and this, we then say that usually, if it comes and take out this is your decision point, right? So what happened? Remember, I just bypassed this guy, this one, right? I didn't stop here because this is a liquidity grab. For me to say this is the change in character, there must be a bodily closure. So this is the chalk, actually. When there was a bodily closure, not the spike. So when this is your highest point, see, between your two eyes, this is the first eye, second eye, this is decision point. If markets, this green candle is for you to go to lower time frame and do a buy because they are taking the liquidity here. There's no bodily closure. If there's a bodily closure and you want to see buy because of the retracement, you go and look for maybe another flow down here, right? Or another block. So for example, this is the last selling, this place is the last selling move, right? But this place, this other flow had already been used by this guy had gone there before. If you take it there, though it came back, but previously it had been used, right? So, all right. So, but this is a chalk, right? So if this is a chalk, this is our reference point now. This one. This is our reference point, not this one, not this one. This one was a mere liquidity grab, right? Because there was no bodily closure. This is what we're looking at. So what has happened? For us to say that this is a chalk, this is, for us to say this is a break of structure, it's breaking your chalk to say this is confirmed. For us to say this is confirmed, the market needs to take out the first pullback, which is this area, right? This was the first pullback. So this is the inducement. So again, I've been looking at this trade, right? I never traded it, right? Because even though it was given different directions to the downside, I will not trade it. I would only consider trading if this first pullback is taken out. So I looked at it on Friday and I saw that this green candle, look at it. This green candle had spiked it. This other candle took out this liquidity in this candle, right? So again, so when I saw that, so if I take this to the future a bit, so let's see what is happening. So the fact that that has happened, so this is my low. So this is my low. So market needs to, if market clears this low, for example, I have confidence that the market is coming to the downside, because after the chalk, there's a break of structure. You know, now it could be that there's a fake out, right? It could be that this place is a fake out. You don't know, right? But you are not trading your assumption, you are trading what you are seeing, right? So, but if it comes back here for us to continue to sell this week, if it breaks here to the downside, of course, we don't expect it to come back here again. So you look for entry, continuation of sell. Okay, but why is it trade here? This is 4 hours. You already saw that there's a liquidity grab in here. Market had taken your inducement, right? And usually you trade, once the inducement is taken out, you check. There's no valid order block in here, right? Everything mitigated. The only thing not mitigated is the wick of the red candle, not the green candle. The green candle had been used, right? Is the wick of this red candle, for example. That's the only thing. And this spike got to it, right? Again, maybe marginally missed it, but again, it got, if you didn't zoom out, you don't know, right? So we say that was what was pending, because if it doesn't come back and sell from here, then you are not doing anything. You are waiting to see the activity up here. I know that you could also check in terms of fair value gap, right? And see if it's going to, let's say it failed to sell from here. You then be checking those areas. But now, why did I consider this trade? This is the markup. I already saw it. Then if I go to 15 minutes, in 15 minutes, I need to see, right, that there's a chalk. 1 minute. Let me go back to so now there's one bit I did not mention. This is a liquidity grab, right? This green candle, this one was a candle that took out that liquidity, right? So I'll take it as a single candle order block, right? The candle that took out the liquidity. So I already marked it like this. So that's like, we call it scope, right? Single candle order block. So it took out the liquidity. If you come to 15 minutes, and I saw that, look at this candle. It came and spiked that area, this green candle. So if we spike that area, in 15 minutes, this is the chalk, because it took out the first pullback, right? So this is why it peaked as chalk. So if you see this trade did not peak almost close of business, right? Because we're doing all those things, I will not trade it, actually. So this is, the entry is this point, right? This is the candle, this. So you can see that this is where the peaked the trade, I think gave about 20 pips, right? And so in 15 minutes, for example, if I want to add additional to this position, I would need it to come and do a break of structure here. If it breaks this structure, then I can look for additional entry up, right? And you expect it to move down. Now, the way it is now, you cannot lay additional entry. No, you can't, because you don't have a double confirmation. Aside the fact that this is a chart, you need it to do a break of structure. If it does break of structure, so look at what I'm explaining so that you understand what I'm saying. So if it comes down like this and does something like this and breaks like this, let's say it happens like this. If it happens like this, and let's say I'm not okay with my $10, right? I don't want to close the trade. I would. So this is then the inducement. I will not trade it here, even though this is my trading time frame, right? This is just pure smart money. You're just trading order blocks, right? We don't trade order blocks that way. We trade when inducement has been taken out, right? So I'll wait for it to come here. Now it needs to take out this one. If it takes out this one, I will then trade the order flow, which is the last buying move, right? I will trade this one. This is the order flow. If it does something like this. So my second entry would be here, just above this order flow. Right? It will be about 21 pips. Then the target is this one. So it's straightforward. If you don't just enter and say it's back to, you enter based on your understanding of how the market should move, right? If it does like this, this is where you have additional entry. So if you break this area, there's high chance. So if you break this area, what are you looking at? So if you zoom in 15 minutes, then this place then becomes this. There's an inducement here, right? So you expect that it will come here. Now, for people who trade, let's say, this is how you check if your trade will work. So people who trade trend line, right? You see that this is 1, 2 is spike. You are waiting for the third one to come here, then you buy. Again, I know those days we trade like this, right? I say when it is third touch on your trend line, it's very strong, right? So this is one. This is a trend line liquidity in here. So when it's coming back, it's going to take you thinking like that, right? But when it takes it out, it's going to retrace. It's not going to just be coming. So it's going to retrace. Where it's going to retrace is that this other block is taken out, right? This is the wick has not been taken out. This is another flow, right? This other flow has not been mitigated, right? It's when it's coming down. So if it takes this place out, if you invalidate this area, if you want to do that, it can come and the retracement of the buy could be from here. It can also be from, even though that green candle, that red candle had come back, it can be from here. But in terms of refinement, could be from this place, right? Because there's no action here, there's no mitigation on the other flow, right? So it could be like this. So if you are doing trend line, you expect that it's going to bounce off, right? Because when you are doing trend line, you will do it this way. You say that you then pause this area and say this is a support, right? And you expect that when it comes here, if I put EM in there, maybe perhaps it's going to align. So you expect that when it comes here, it's going to buy. But when it takes out, if it takes out this liquidity, if there's no bodily closure here, it just takes out this. I will take my trade to break even, right? I'll take it to break even. Because this is just a liquidity guy, can come and take me out stop loss, right? So I'll take it to break even. If there's a bodily closure here, so I have a bit of confidence that it will further come down, right? So again, this is for EJ, and this is the entry just based on what I've explained before. It's straightforward structure. Maybe this is 415. I'll try and do one additional pair. So we've done EJDXY. I'm just trying to do the one that people trade so let me check. Madam Ajoke, looks like you've been on a sabbatical, right? I don't know if you are trading. Maybe you're just taking some time off to take care of babies, right?
No, I'm trading.
Okay, you're trading. So what pair are you looking at? So let us review it together.
Oh, the last one I traded, USD card.
You traded what? USD card.
USD card. Yes.
Did you see? Okay, USD card. So let's check it.
Yes.
So you not see it here. So that's one thing. So for example, so I'm going to analyze it, but this is just because it mentioned it so I don't forget. If you look at what I put here, because I trade pairs where USD is the code, so I don't have USD card here because I don't do counter. I don't do when this one is selling, so I should. No, I would rather do other pairs, right? So that's why it's not here. So I'm going to open it and see what is there. USD card, right? So I can do one that because I don't have it open on my side. Okay, so because of time, I will not go to daily and other stuff, right? So let's just look at what is happening, USD card. So it's looking very interesting in here, right? So if this is what is happening, right? So let's even say, because before you do an analysis, you want to see where a massive structure was taken out. So for example, we see this was like a trend line support, right? For example, I'm just using this thing to say upward. This was the last one that was taken out, this one. So when it was taken out, so that would be our reference point first for this analysis, because we need to know what is, because this is for us, what is the structure before we go to current market. So this was where there was it broke structure, right? So let me put BOS here. Don't worry, we'll come to where we take a trade, but I just want to quickly see what is happening.
Okay.
Okay, so when it broke this, let's see. So this is your pullback. It got to this point. So this is the inducement, right? This is the first pullback. So because this inducement was taken out, then this was a low because it retraced from here. So it came back and broke this structure, right? Now, this is a break of structure to the downside. So let's see what happened. This red candle, if we check it to the back, if we take this red candle, see what I'm saying. We take this one as a low, for example. We check it to the back, the inducement is supposed to be up here, right? But it didn't get there. So it then came and broke here. So this is your low, and this is then your inducement, your first pullback, right? Okay, so it means that this is where, when it broke this area, this is it. So let me see. So this is, at this point, it's still coming to the downside. So it broke this structure. If it broke this structure, what is there? What are we seeing? This is a pullback, right? This one. So when it took out this one by this spike, this low was confirmed. Let me pick this. This is a low, right? So we expect that if he wants to continue to sell, it needs to come back to take out this low. This is it. Now, so let's see what is happening. So if this is the low, this is the low, meaning that this is the high, correct? So that is the range, right? So we'll take it out. So we expect that it shouldn't have closed above this area. Right, even though it struggled, right? Because this is the last POI, this other block in here. It was supposed to sell from here. It spiked it, then it sold, right? So it was supposed to don't stop there, come and break the structure. We'll say it's then coming to the downside, but that didn't happen, right? It didn't happen, it means that this is then a chalk. So this was when it changed, and that's why, because I have USD on my quote, I'm selling, right? You can see this one is buying. So that's what I was saying. But I don't like to do buying, selling, right? I just focus on one direction. Don't mind me. Okay, so let's see. So this one is a chalk. It got to this point. For us to say this is a high, it's supposed to have retraced to take out the first pullback, but it did not do so, right? This move did not do so. So it's a single line move. So it broke out from here, started going up, right? So let's see where there's a valid high. So this got to this point, could not retrace, got to this point. Let's see. Let me see if this one. Right? This is something like a double. Let me see. So we need to check very well. So it's spiky. Can you see? This, it actually took it. So this is a pullback, right? So it's very obvious. So this is a pullback. So this guy took out, this retracement took out this one. So I will put this one as inducement. So what it means is that this one is then a valid high. So the fact I broke it above, this is a break of structure. Now that there's a break of structure, so let's see what's happening. So this high, it took it out. So when it took it out, where's the first pullback? Let's see if that is a high. This one, their inside move. This green candle, for example. This green candle, everything that's happening here, they're inside this green candle, right? All this movement. Yeah, inside this green candle moved out. So because they're happening inside, usually I would not consider them, right? Because everything they are embedded in this green candle. So this one broke out. So I would expect that it takes out this one for me to say this is a high. So it didn't do that. Okay, so it came upward. It got to this point. When it got to this point, this green candle high, it means that this is the inducement, right? This one. So that was the pullback before it made that high. So this one took it out. So this is a valid high, this one. So the next time it got there, it could not break it, right? So this is the valid high. Now, let's see. This did not retrace. Then this one high from here transfer to this point. This is a valid pullback. This one. So this is a valid pullback. So we expect that price will come and take it out. Took it out. So it means that this is a valid high. This one. Okay. So if this is a valid high, we expect that price should come above this area for us to continue to buy, right? So between this high, this one, this high, and this high, the lowest point is this one. So obviously we didn't expect that price should break this point, because without this is a change in the market direction, right? Based on how we trade and based on the strategy we're using on this market review. So it's supposed to displace this green candle from here, for example, this area. When it came, this buy is supposed to take it. It's supposed to take it up here, but unfortunately, the buyers were not in town, so they could not take it high, so it broke it, right? So if we're buying, we're then very skeptical, right? Because this is where the buyers are supposed to show interest. So we'll say that this is a chalk, right? Now, if that is the case, so what are we then looking at? So let's see. If we broke this area, now it got to this low. Where's the first pullback? Where's the first pullback? You take this move upwards. So this is your first pullback. So normally, if I trade, for example, all the things that is happening here, I'm not interested, right? This is a chalk based on how we have marked structure. But you don't know whether it's a fake chalk yet, right? You need market to, this move, if it takes out this one will be a valid low, right? This will be a valid low. If it is the valid low and you take a sell, for example, if it comes back and breaks this, it means that it has broken structure. So from your chalk, then you then have a break of structure in your higher time frame that you're analyzing. This is a further confirmation that market is coming to the downside. But when it's a chalk, again, you're just trading it very cautiously, right? And see, because it could be a fake chalk. What I meant by fake chalk is that this is a normal break of structure, but it could also come here and break this area. So it will move from this point. If it closes above this area, I know it's a buy continuation, right? So that was the point I was trying to make. But let's trade. We're not simulating what we think that will happen. We're just trading what we can see. So in this place, for example, if you look at what is happening here, I said that once there's a chop, we saw it even in DXY, market would always react to that place, right? So this area, this is the order flow, right? This is another flow. So you can see the market reacted and sold, right? But for the way I trade, for example, let me check it again. So if you check it back, I'm interested in the first pullback. So this, let me show you something. This candle, this red candle, this one. So all these things happening here, all this about 12 hours candle, all those ones. I don't count them, right? So it's because those are inside this red candle. So no, I don't count them. So this is the candle that broke out. So if I'm checking my pullback, I'll count 1, 2, then this is the third one, right? So that's why I'm not counting those inside. Then this one that has a spike, this other candle is inside this one, so I will not count it. So if I check it back, this candle, all these other things are inside, right? So this is the first pullback. So I perf that. So if I would trade this, for example, if I would trade a sell,
Okay.
I want the market to spike this area. Now, if it comes to this area, see what I'm looking at for. This is on the 4 hours. If the price is here, if 4-hour candle is here, it has not closed though. If the 4-hour candle has not closed, I will then come to 15 minutes.
Okay.
If I see a 15-minute candle this way that has closed and it's like this, and I see that what it means is that it had taken that 4 hours high, this 4 hours high, right? This high point is 5, and the candle had closed. If I see it that way, that is the only time I would do a market execution, right? Or I wait for the next candle to open, depending on what you're saying, right? And I will aim this area. But if I see that a 15 minutes candle, this is 15 minutes is your entry now, right? I don't mark in 15 minutes. If a 15 minutes candle had closed above this one, you don't trade, though. There's no confirmation. So that's why we say, oh, wait for confirmation. There's no confirmation. If it closes bodily, there's no confirmation. You then come higher and say, where is your unmitigated order block or order flow? So if you look at this area, for example, so you start from top, right? In terms of top, this your green candle is the highest one, right? All those other red candles that happen, all those things they happen inside the green candle. So normally this is supposed to be your order block. But look at this other block. It has been mitigated, right? There's a retracement index, so it has been used, right? If market comes in here, maybe wants to go to continue to buy. If you take it downward and say, this is an order flow, right? This your order flow, it has not been mitigated. So when it broke out, this one that touched here is not my interest because it's happening close to it. I'm talking about activity in here. So this order flow, right? If you take this from the red one, right? This one. So for example, if you take this one, in terms of the candle itself is from this is the red candle, right? Because those other buy side, they didn't break out. They're inside this candle. So if you check it, you see that this touch is there. But if you are watching this area again, because it's for the purpose of entry, right? You are looking at the order flow. You check that is if this if the 15 minutes candle closes above this area. So you are checking this area to enter a trade, right? Once it gets here in 4 hours, you need to get the confirmation in 15 minutes. Because obviously, if you then check downwards and say, what is happening here? If you check this order flow, which is the buy move, right? This is your buy move here. It has been used, right? Came down, this spike went up there. In terms of order block, you can't have any refinement, right? In this case, even though this is an inside candle, right? Because it's entry, that's why I'm looking at it. So if you refine it in terms of order block, you take your green candle, right? Or you take the red candle and you see a fair value governing balance, right? But let's say you are interested in the order flow first, because sometimes you may not mitigate your order block. So this area, there's no entry here. This is just a liquidity. It means that it needs to take out all this things. If you go to a lower time frame, if you draw a trend line, you see something like this, for example. So you need to take out all this area. So you don't have entry in here. It's when it's done with these guys, you are then looking at this area. So this is one aspect. If it does something like this, it clears this area. As a matter of fact, because we analyzed it, I want to watch this trade, right? And if it's plain at if I'm entering the trade, I also tell you that I'm entering the trade. But for me to enter the trade, I need to see it come to this area. And 15 minutes unable to close bodily above this area, I will sell to this point, right? If it closes bodily above this area, then we'll look for this area. Now, if it invalidates this area, I will then, again, before you enter a trade, you would have gotten confirmation 15 minutes. So if you invalidate, maybe it's just trying to go high. So this place may have been a fake chop, right? Because you need it to come back in here. And if it does something like this, it's a confirmation that because it has done chalk, it has done BOS, so it's going to sell. Right. So this to be my opinion, right? My perspective on the US card. All right. So this is just let me just see if we can do any bonus pair. Let's see if anybody. Let me check the chat. I'm not sure there's anything. Is there any for round up? Let's do that like a bonus pair, right? So is there any other? So let's give the benefit to Ajoke and see. Do you have any other pair aside US card? We'll do that within 10 minutes or 5 minutes. Madam Ajoke, is there any other aside US card? Is there any other pair you're looking at? Let me see. Am I audible? Can somebody hear me?
Yes.
Okay. So you are muted, Ajoke, in case. So I just wanted to, again, so what we're trying to do is to analyze a pair that we know that somebody wants to trade, because that's what gives a bit of content to what we do. So Ajoke, are you there? Is there any pair? So we're just giving 15 minutes window, right? 5 minutes, right? To be able to check a final pair. If there's a pair that we want to trade, can just quickly look at it when we see what we expect would happen. Again, it could be otherwise, right? If we're so certain about what the market will do, we'll not be trading with stop loss. So the fact that we have stop loss, it then means that there's no strategy that's 100%. But when you trade with a particular style and it's profitable, you're making money. So why change it, right? Okay, so I don't know if Ajoke is active or maybe let me see somebody has dropped a chat. Oh, so it said gold, right? So let's use gold to round up. So let me check. ZAO USD. So let me open goldenforest.com. All right, so let's look at gold because it's 5 minutes. I may not go to daily, right? So, but let me just, because gold is like very interesting, right? So let me just quickly see the daily. So let's check with the obvious high. So this was, then I will just kneel it off and check for us. Okay, so this was break of structure, gold, right? Now, when it broke this structure, what is happening? It came to this high, this is not a valid high. It gave this high, this it needs to take out this one, didn't do that. It gave this high, this is a pullback, so this is a valid high. So again, I don't need to be putting those box, those in this one. We should know by now. Okay, so this was the break of structure. So let me just quickly check something. Even though this rejection, right? Again, this one, but since the body is above your previous, so it broke it. It came down. This will be the confirmation of this high. So this is the high, right? So in terms of range, on this side, then the fact that this is high, the fact that we then saw a bodily closure above this area, below this area, sorry. This was when we got the chalk gold, right? That this gold is falling because I had done something like this. Now, what is it doing? So let's check. This is daily. Then go to this point. This is not a valid low. Go to this point. This will take this green candle as a low. Then where is the pullback? This is the first pullback in here. Just 1 minute. So if this green candle is a low, we check backwards and see where's the first pullback. That's it. It did not take it, so this is not a low, right? So what happened? It came back. It came back. This low is transferred to this point. So if we transfer this low to this point, where is the first pullback? So this is inside move. Before that, so this is a pullback. So we needed go to take out this. Let me see 1 minute. Okay, so but it did not do that, right? This I'm referring to this point, so I understand what I'm doing. This we especially did that when you go to this low, you come and take out, but it did not do that. So we will not say that this is a low, right? Then what happened? Go to this point. When you go to this low, what then happened? This is the pullback in here, this green candle. All right, so this is it. Again, so this is took out the inducement, right? Then this is here. If you close this above this, below this area, I would say it's a break of structure. So let's see what has happened. Okay, so if it breaks this structure, so from where it did a chalk, it got to this point, then this broke this structure, right? To broke this structure, this one, let's see if this is a confirmed low. This is the point I'm talking about. Okay, so for us to say it's a confirmed low, the reference is your green candle. So we check it upwards. This line, this point, so this is inducement, yeah. So on the daily, for example, you will not, can you see, is when this inducement is taken out that you trade. So that's the patient I talk about, right? So you must, you know, when you're doing top-down analysis, you trade everywhere, right? Because you see it differently. But on the daily, if I'm analyzing daily gold now, all these things, this part now, for example, I don't have any trade here. Sorry, excuse me. This place, I don't have any trade here, right? I only had, this is more than a week, right? So this is, when I would then trade is this spike, this green candle spike, this other candle that took out this candle. So at this point, you know that, you know, because for it to go higher, it needs to come and take out this, right? So that's the only way I would have, but this is where I would have then traded if I'm using daily. So now, based on what this has happened now, this is low, this is low, this is, so let's check upward. Let's say this is a liquidity gap. Once inducement is taken out, as I said, once inducement is taken out, so this is a clear example of what I used to say, if it spike and the body close inside, so you can sell. If it closes outside, you know, you go to your extreme. So for example, you then start and mark your other block. So if you put it here, for example, the shadow of this candle has been mitigated, right? So you take it down to the next one, which is this one, and check and see this green candle got in there. So this green candle had used this area, right? So this spike had come to this other flow. So if you refine it, for example, let's say you look at this area, right? Because those other areas, they've been used, right? So if you are waiting there, price may not get that. You check here, no. So if it takes out, so this area, you're then looking at this area. Let's say that it closed, there's a bodily closure above this area. This is where your highs will be. You know, your highs will be on this point, right? Because all those other areas, there's already mitigation, so you don't need to wait there. Okay, but let's even take out this one. This is just for explanation. Now, what has happened? It took out this area. We expect gold to come and break this structure, right? Break this structure, then this. But look at what it's doing in here. Let's check. Now, what is it doing? So when it's coming down, remember I said that once an inducement is taken, a market reacts, right? This is an inducement. which is on the buy side, right? We already know that globally it's a sell, right? But that's why I said that when you are trading, if it gets to this area, you don't take your profit, it's going to mess you up. This is a clear example of what I said, that in EJ, if it comes here, if there's no bodily closure, I said that during the review, I said if we paid attention, right? In 15, I said if the 15 minutes candle does like this, I would take my trade to break even. You can see it. When it does like this, because you don't know, it can come to the upside, you can see it will come back to your entry. You see, because this is a liquidity graph. So this is a buy side. That is, this is an inside move. It's not a global structure. It's the inside, because this is a global structure. You already know that it needs to come down. But it gave you an entry. This is on the inducement. The fact that it took out this, for example, and because for all you know, remember that there is another block in here that was said is still left here, right? This is this area. This is 1965, right? Okay, that I didn't get to it, right? So you don't know when it gives you this area, you don't know whether it's going to come back in here. But what you know is what you are trading. So it takes out this area and is buying. Now on the daily, for you to then say you want to take a sell, for example, you can come back here because this is what you are now watching on the daily. You are saying that this area, because this is then the new it took out this low, right? So you are watching this area number one to say that if it comes back in here, right, and breaks here, then it's going to come to this low. But this is a range you are looking at. Now, when it got to this area, what is happening? So you come and check. If you check it back, where is the inducement? So this is this red candle, this one. This red candle is 1. This green candle, I will not count it because it's inside. Is this red candle I will count because this one came back and took out this one, right? Then this green candle took out this one, then it fell. So this is, now the inducement is then this area. That when it took out, see how trading is. Trading is very straightforward, right? So this is what I'm saying. We took the sell. We expected that it should break this area and then come and do a break of structure. But it did not do that, right? It took out the liquidity. There was a liquidity graph. There's another coming up. When it's coming up, for you to go and enter a sell, you enter a sell, you cannot trade sell again until the liquidity must be taken out, which is the first pullback, right? Because this is an inside move, right? This is where you are looking at. First point, then the next point you are looking at is this point. That is in terms of whether there's a continuation to the downside continuation, or is going up, right? Now, all those things you are taking inside is because this is a daily time frame. You cannot say you not take trade, right? It took out this liquidity, it will buy. Now it took out this sell side. So what then happened? This is the sell side liquidity. When it took it out, this green candle closed above it. So you cannot sell. It's not like this one that you can buy. Because this one now, there's a bodily closure above this area. What will you then do is you then go and check where is the other block, right? Above this liquidity. Now, this is the other block, right? This is the single candle other block, this one. This was the one that took out the sell, that gave us the sell initially from this point. This other small candle inside of this one is like mother and child. But this is the major one. So if you take it here, you can see what happened, right? So this is how you trade, right? So now it took out this inducement. You already know that this is where you sell. You can see that this green candle got to this area, reacted, right? Then this green candle also took out this high. Then this one went again, took out this high. When it took out this high and closed this way, see how sharp the rejection is. So this rejection now, what is our guide? If you are not in this trade, for example, I can go to 1 hour because this is daily to check if there's any confirmation. Let me check. But if you are not in this trade and there's no confirmation, you need to wait for it to take out this one. If it doesn't take out this one and it doesn't invalidate this high, you don't have a trade yet, right? But let me just go to 1 hour to see something. So I go to 1 hour and see what is happening. So it has gotten to this area. So in 1 hour, where's our chalk? This is it. This is the chalk. This is the first pullback, right? This one. This is chopped in 1 hour. Because it has mitigated, there's a higher time frame, which is daily, that you're referencing. So this is it. I used to say that when there's a shock, you see, market will come to that area and come back. But I don't trade that one. So now what has happened? So this is it. It got to this lowest point. So let's see if this is a valid low in 1 hour. So in 1 hour, we're checking if this is a low. Okay, so where's the first pullback? So this is, you take it to the back. This is it. So this is it. Because this candle, this red candle took out. So this is the first pullback. So in 1 hour, it is obvious that market has given us indication that it's coming down, right? Because this is the first pullback. If market takes out this pullback, look at it. There's a bodily closure above it. So that's why you are not selling when the inducement has been taken out. Yeah? When you come next, which area are you looking at, right? Remember that in 1 hour, this is the order flow, right? And I said the refinement of the order flow is the order block. So this is the order flow. This way, right? This is it. So you are still there. So what has happened? There's an order block in here, 1 hour, right? This is what you are trading. Why are you trading this area? Because the inducement has been taken out. Whether it's lower time frame or higher time frame, if you don't know this, it's going to be difficult for you to make money in Forex. This thing that we're looking at today, right? And that's because market will just go little, take you out. So you can see what it's doing. Why? Because it has taken the inducement. So if you are in this sell, for example, you definitely make money because your sell will be here and your stop loss is just above this area. If you are maybe thinking that this one is another, okay, put it above this area. That's about 39 pips, right? And this is where your target will be. This is 137 pips. That's 1 ratio trade. So this is your entry, right? Now, this is, if you are in this trade, this is a good sell based on daily analysis. If it's invalid, because this one is already a valid low, this is a chalk in 1 hour. If you don't win this trade, look at where you are taking your trade. This is your next highest point. If it doesn't take, this is number one, you take it from here. This is your last buying move before the sell, right? Now, in terms of refinement, because sometimes when you are waiting for your other block in here, it's not mitigated. I'm just telling you why, right? This is if the peep is not strong, let me say, because this is, I can even trade this one, right? So let me check something. This is about 67 pips, so it's high, right? So, but normally, this is the order flow, but since it's high, refinement is here. Except maybe you're trading with a low, but again, you can miss it, so it's either of the two, right? These are about 36 pips. So this will be your next entry. Let's say this one does not fail. This one fails, right? And why is this order block very strong? It's because you also have a fair value gap, right? In here. So if you think that this order flow is too expensive for you to trade, this will be your first entry. Your second entry will be on the consequence encroachment, right? So I learned this one for, I think it was Jay mentioned this word in the office, and I just picked it. I went to check. So that's 50% of your fair value gap, right? So this is it. So that would be about 53 pips. So this trade, this good trade, I think that again, I don't need to go to far because I've seen what I'm looking for. So for good, for somebody who sold at this point, is still holding this trade, 1932 stop loss, thereabout. If market opens and it spikes to this area, if market spikes to this area, somebody can take an entry, but this other block is still valid, right? Because we expect that gold would come back here. If it breaks this area, if it invalid, so why do we have confidence to sell gold now? The reason is that this is a valid low. The inducement is taken out, so this low is confirmed after chalk. So it needs to come down, right? This area, this area is the area that we saw on the daily, right? So that's why, remember, I did not come and say, this is what you are doing. No, you don't trade that way. You trade based on the low on the time frame you are entering. Don't, because that's where you mess up with your emotion. Because if you go and trade, if you go and put your take profit here, if it takes out this area, let's say it did not create any inducement, so this place will be the inducement. It will come back, take out this area again. Then it can then come back to this area. It may, if it can decide to come back in here, right, and then come back to this area. So you trade, don't be greedy, right? You trade and exit your trade the way you should exit. This is more than 120 pips. So what are you see within staying in market?
So Paul, well done. Very, very well done. Please, can you let's just round up this meeting now, but I want to round up on this particular note, because this thing that you're explaining now, that was an exact signal at this same point yesterday. I mean on Friday. So can you give me, let me just show you. Guys,
okay, 1 minute.
what I'm just trying to tell you is Paul was not in the office on Friday. I did not tell him anything. We have not had any discussion before now and before then. But he's giving you exactly the same signal that I gave. And the funniest thing about this market is, we have different approaches to the market. How many of you saw this signal? Please just let me see one. If you saw this signal, I just want to pick it from the group. Can you look at that entry? How many of you saw that signal?
Hello, people, are we here?
Yeah, they are here. I think they are. I only saw one person saying 111. It was only okay. Notice saw it. Okay, easy guys. Let me tell you something. If there is any time in this life that you have to take Forex very serious, and you have to take every other thing that we are 15 here very, very serious, it is now. How many of you know that dollar is now trading at over 1,000 naira per dollar? Guys, this is the time to be patient. This is the time to pay attention. This is not the time they will call you, come and learn something. I will be chasing you around. This is not the time they will ask for you guys, come for market review. And not only that, everything in Finspot. I mean, Shola is here today. Maybe Shola will speak about that later on, right? We are going to start monetizing Finspot because we have checked the market and we realize that a lot of people talking about Forex Academy, they don't know what they are talking about. And it looks like we are taking everything here for granted, right? But for this, look at this signal, for instance. Can you see that? I mean, Paul, from your chart, is this the 1927 area that your entry is?
Yeah, I think it should be the same area. This is
exactly. Me, I was even trying not to be greedy with my stop loss. I took my stop loss to 1935, which is even about the area you are talking about. And we did this thing independently, and we are getting the same thing, guys. So, guys, let me just quickly show you how I came up with my own idea. Okay, and you are going to see that it's a bit different from what Paul just did, right? But it's the same answer. But we are talking about the same thing in different ways, basically. So let's assume I was watching this market very closely. Are you guys, sorry, I'm trying to reshare my screen now. I want to share something else. Can you guys see what I'm sharing in my chat? I just want to quickly round up.
Yeah, the chat is up now.
Yeah, so now I keep telling you guys, how many of you if you have watched my video on entry that I did on Ethereum, if you watch it over and over again, you will never be missing this kind of trades. If you have watched it, please, can you let me see 111 in the chat box? If you have seen my video, please let me see 111 in the chat box. Guys, go and watch that video before we start monetizing Finspot. Because right now, everybody is getting everything for free. Right, only Rotten has watched. Okay, Toyo, have you watched it? Okay, Paul has seen it. Good. If you see, the same thing I said in the video is what I'm going to do. So I come to the market. Forget about our top-down analysis, right? Because I've done that before. I come to the market. This is what I see. Quite honestly, the first thing I'm going to be looking out for, is the overall, for instance, Paul did this. The overall direction of the market is a downtrend. So I've already established this, right? That the market is downtrending, isn't it? You can see that price never got the chance. Please, for your friend, please invite your friend to be coming to this market review on Sundays. You'll be doing them a lot of favor. If you are not even ready to learn, let people. Can you see? You see every single attempt that price made, right? Failed on that line, trend line, right? Can you guys see? That's a perfect trend line. You cannot see any bodily closure above that trend line, right? You cannot, if you are not having any disturbance in your, sorry, just the way, it's just my own psychology. If I'm talking and nobody's answering, I feel like I'm alone. So if you are in a place that is not noisy, you can unmute yourself and answer, okay? You are permitted. So what I'm just trying to say here is that I've already looked at this. So I've already seen that the overall direction is a downtrend. The next thing I have to look at is when was the last low before the breakout. So I can see now from here on the daily, I already know that this is a valid low. I already know that so many inducements above. So let me not explain that. Let me not discuss what. So I already know based on this that price is coming to this side. So I am not worried. So what I want to now look at is to go to lower time frame. I'm canceling this. What I want to now look at is to look at what happened in the lower time frame, which is a 4-hour time frame before now. I want to just know what happened, guys. Guys, this thing I'm about to do now, if you practice it every day, you'll make money, right? So the next thing I want to know is to go back to a lower time frame, which is 4 hours, and look at, okay, so I already know that I'm looking for a sell, no doubt. So the first thing I would look at is to say, you know what, let me take my Fibonacci, right, and just look for my premium and discount. If you understand the premium, this concept of premium and discount, sorry guys, if you understand the concept of premium and discount, trust me guys, and what did I say about premium and discount, right? What did I say about premium and discount? I said you must always buy from where? Put it in the chat box if you don't want to talk. You must buy from where?
Buy at the discount price and sell at the premium price.
You buy at discount, you sell at premium. If you can understand this one, and anytime you get to the market, you just look for the direction of the market and you look for your swing high and swing low, and just tell yourself, I am not going to sell at discount. I am only going to buy at, if you sell it at discount, please let it go, right? Let it go. You wait for a discount. Anywhere from this 50% and above, you are free to sell. Anytime from this 50 and below, you are free to buy, but you have to watch out for, change of character. So any change of character you see up here that is validating a sell, you sell. Any change of character you see around here that is validating a buy, you buy, right? But don't pay attention to any change of character that is telling you to buy at discount. If you want to buy, let it buy first. That means I have to see that price is ready to break this area. If price is not ready to break this area and come back here, then I will not be paying attention to anything that is happening. It's a very simple rule. Anything that is happening within here, I don't pay attention to it, okay? For a buy. But if it's for a sell, then I can pay attention to it, all right? It's that simple, right? So what did I do first? I went to higher time frame. I looked at the overall direction of the market. I saw that the market is selling, so I am interested in looking for sell. So I went to the lower time frame, and the next thing is for me to look out for, my, my area of discount and premium, and I can see this was the last low that painted, and this was the last high that painted. So I just took my Fibonacci. And the next thing is I want to sell from this zone and I want to buy from this zone. So the first thing I can see here is that why this price was coming back, it created this imbalance. Very simple. The first thing I want to do is to take my tool and just look at fair value gap. Then what did I tell you about fair value gap? I said if any fair value gap, right? I mean, what did I tell you about order block? I said then I can easily see an order block that has not been mitigated in these 4 hours. Am I right? This order block has not been mitigated, right? And then just below you see a fair value gap. So that makes this order block a very valid one. Now, just like Paul was saying, if you check what Paul was saying, Paul was actually saying that there is a possibility of price still getting to this order block. However, there is already a confirmation for sale somewhere. So let's see how it goes. So this first thing is I'm going to be putting my eye on this area. Let me just show you where I'll be looking at. I'll be looking at this area. I'll be looking at this middle of this area. I'll be looking at a retest of this zone. I'll be looking at, I'll be looking at this area. Yeah. And so anywhere that is above this 50%, let me just draw an horizontal line, right? Anywhere from this area, right? I'll be looking out for a sell, right? Are you getting my point? But I have to see some liquidity taking out some kind of area first. But I've already seen that happen. So that has this place, right, has already given me a retest of that other block. So sometimes we don't pay attention. This place has been tested already. There is already another candle. Sorry, please. There is already another candle. Let me just use. There is already another candle. I'm just going to mark that area so that you can see what I'm saying. So I've already seen that above the. Sorry, guys. Sorry. So I've already seen that this has been marked. I've already seen that, and you can see that area that price touched, right? This area that price touched is the bottom of the fair value gap. So that means that's already like a mitigation of the fair value gap. Then I can also see another area that is marked. This is more like a retest, right? Now, what did that one do? That one actually created an order block. It's telling me something already, right? Created another block somewhere here. Can you see? And even that other block has been mitigated. So that is already telling me something. So if I'm looking for price to come to this side before selling, I might be waiting. But it's still a high risk because this area is still what I'm going to be looking at next week, right? So if you are not in this trade, please don't enter. That was precisely what Paul was trying to explain. If you are not in this trade, do not enter. Be patient. Now, your patience should allow this to happen. You should allow this flow to be taken out, and then you probably expect something like this to happen before it happens in higher time frame. This is how trading works, guys. Please go and see that video. You will learn a lot from it. Don't take it for granted. If you have not seen it, do not take it for granted. So, where am I looking out for? I'm looking out for that area. So the next thing I normally then do is that I would then now take my trend line, right? Sorry, I'm taking time because I want to understand it very well. I will now take my trend line, right, and just mark where that trend is coming from. And the first thing I can change it, right, and I will want to see if I can get a valid trend line. If I get a valid trend line, that is not valid. So I have 2 points here already. So I can check for my 2 points somewhere here. So I have 2 points, 2 touches here already. So I can move it to the body. I can extend it to this side. So this is my valid trend line. So the next thing I want to be watching for is a closure below this trend line. If I see a closure below this trend line as price is coming down next, then that will be my area. So now the point is that the fact that there is already a break of this order block is already telling me something that I should just be looking to this area to sell, this second area. Are you guys with me? Why? Because there is already a liquidity grab, above the 50%. So what I did was, it took a long time. So I was watching price action. So the next thing you can then do is to now look at, okay, if I go to lower time frame, let's say 1 hour, will I see any coincidence between this place and this place? Yes, I can see something, right? Do you get what I'm saying? Now, this happened as at 2 o'clock. I don't know exactly when I sent that signal. So I am now looking at this area in the interim, right, to enter a trade. So I had to wait and see a lot of data. So this is now the area I was looking at. So I allowed the trade to play out and then see what then happened. I was watching, and watching, and watching, and watching, and watching. And can you see that? Immediately I saw that, I paused. Right? I paused. You can see. Sorry, let me go back a little so that you guys can see what I'm saying. I'm just trying to show you why I sent that signal. So let's go back to this last one. Good. Now, immediately I saw this happen, right? You know what has price done? It broke this other block, gave me like a change of character here. So it's validating the sell. But I did not sell immediately, right? This is what a lot of us don't do. Because I have seen another block here that has been mitigated, has been mitigated, in a lower time frame. I want to see. So I saw this liquidity graph here, and then the next thing I did was to go to 15 minutes. And in 15 minutes, I want to see what in 15 minutes will give me. Now, in 15 minutes, see what I'm saying. So when I got to 15 minutes, I saw that this is also another validation, right? Because there was already a break. This is likely going to be a retest. And when I saw this exactly, I just didn't bother. I just wanted to sell from here. So I waited. I think I said the signal earlier than that. So I waited and I sent the signal. Sorry, that's it back. And I waited. You can see what happened. I did not sell immediately when I saw this. I only sold when I've confirmed that this is a valid order block. And you can see what happened. And I came back here and I tried to short this market from around 1927. I remember, I think I had, this was what I did, 1927. Let me just mark it. So I think the signal I said was 1927 point something. I can't remember, but let me just, for the purpose of this, 1927, I think it was 0.2 or 3. I can't remember. But, and I said, I remember very well, I put my stop loss at, I think it was 1935.995 or something. I can't remember. And my TP, I can't remember, but let's just. So, what was important to me is the risk to reward ratio, right? And I think this was what I did. I can't remember precisely, but I will get back. Let me just check. Just let me check. Okay, my TP was 1892. Okay, 1892. So this is 1892. 1892. 1892. All right. So this was what informed the signal. So if you go back to the 4 hours, you will see this was the signal I sent. I just showed you why I sent that signal. If you go back to what Paul, can you share what you have done on the group? I'm going to share this on the group as well. You realize that it's the same thing with what I did, and Paul was absolutely right. And you can see. But if you are not in this trade, now listen, guys. Why did I stop there? I stopped there because I need this one to be taken out. So I'm going to be taking my first TP. Maybe 1 hour will take this out before coming to this. So I'm not going to be greedy. So what I'm going to do is I'm just going to come out of this trade at this point. Are you getting my point? And please, if you are not in this trade, please do not enter. It is late already, because this is the next area of liquidity. Once this one will be taken out first. Once that one gets taken out, then we'll be looking out for this and then this. This is how to make a signal through the concept of premium and discount. So, Paul, share what you have done and let's compare it. with what I sent on Friday, not what I'm just sending. I just use what I'm doing now to explain how I got to that market. So, guys, it is very simple. This business is very straightforward. I wish you all the best. Over in the course of the week, we have spent 12 more minutes. But if this was more insightful, can I see some 111 in the chat box? If this was more insightful, can I see was very insightful? Oh, I just left. Oh. If this was very insightful, can I see some 111 in the chat box? Guys, please continue to learn the concept of confirmation.
Let's have 111 on YouTube too, because we've been live on YouTube for over 1 hour.
Oh, fantastic.
Yeah, so for the
please, can I have the 111 on YouTube as well? So guys, so let's see what happens in the course of the week, and I hand over the class back to the host can reclaim the class, and let's end the class. Thank you.
All right, thank you everyone. Thank you for that useful input. I think we can round up except there's any comment from the academic administrators.
Have any question, even if it's tutors, even tutors can ask questions, right? Please ask questions. Let's solve it. There is no reason why we should not make money in the course of the week with this knowledge. If you are not making money consistently right now in Finspot, it is your fault. Yeah, but I know that a lot of us have been making money. We have very good testimony, and we want people to keep it up. Please just obey the rule. Observe proper risk management. Don't overtrade. Don't open multiple positions. Please, once you enter a trade, walk away from your system. Once you have done your analysis and you know what risk you are taking against what benefit, then walk away. If you cannot get to a point in your trading career where you can just set up your trade and just continue your normal business, you are not yet there. And that is what I want everybody to keep working towards. I wish you all the best. Thank you. So we can round up.
All right. Thank you everyone for your time. You have a fruitful week ahead. Bye. So we're going to end the session now. Bye.